There's a moment in every trader's life when the market whispers before it roars. And most never hear it. I've spent years watching charts like a man watches storm clouds on the horizon, half expecting lightning, half hoping for clarity. But the truth is, the biggest moves in the market rarely arrive as thunder. They arrive as a clue, a faint disturbance, a subtle tension beneath the surface. Something small enough to dismiss it, yet powerful enough to change an entire year's performance. Before every major run, before every devastating collapse, before every trap disguised as opportunity, there is always an early clue. Van Jesse Livermore, man who read markets like a prophet, studies shadows built his career on recognizing this first sign of life. Tonight, I want to take you into that mindset. Comment hook. What would you do if you saw a small clue that went against everything your emotions wanted to believe? Comment your thoughts below. Now, let me set the scene. I'm sitting in front of the screen, the same way Livermore sat in front of chalkboards more than 100 years ago. Different tools, same battlefield. The smell of coffee instead of ticker tape. The glow of a monitor instead of a trading pit. But the psychology, that hasn't changed one bit. And as I stare at a market that feels confusing, hesitant, almost contradictory, I'm reminded of something Livermore said. A trader's job is not to predict the future. A trader's job is to wait for the market to reveal itself. Most traders don't do that. Most traders can't do that. They jump, they chase, they convince themselves they're seeing strength or weakness, when really they're only seeing their own impatience reflected back at them. The market doesn't deceive them, they deceive themselves. But Livermore, he studied something else entirely. He watched for the first deviation from the norm, the early clue, the tiny precursor that told him a shift was coming, not a guarantee, but a probability, and that alone gave him an advantage the crowd would never understand. So let me ask you something deeply uncomfortable. Have you ever entered a trade, not because the market confirmed it, but because you wanted it to be right? I have. Every trader has, whether they admit it or not. It's the internal conflict every trader faces, the war between the need for certainty and the reality of uncertainty. The early clue isn't about predicting direction. It's about accepting that the market will always tip its hand, but only to those who wait long enough to see it. Livermore used to sit for weeks without placing a single order, not because he was fearful, not because he lacked confidence, but because he refused to act until the narrative of price showed its first sign of alignment. He believed the earliest clue was worth more than any news headline, analyst opinion, or economic report. Because price always leads, everything else follows. Let me take you deeper into that mindset. Picture a chart that's been moving sideways for days. Nothing exciting, no drama. A range so tight, it almost feels engineered. Traders grow bored, they force trades. They anticipate breakouts that never come. But Livermore would sit there quietly, waiting, watching the volume, watching the character of the movement, waiting for something to shift. Maybe it's a slight change in how price reacts to support. Maybe it's a sudden spike in volume without a large candle. Maybe it's a false breakdown that instantly recovers. Maybe it's a higher low that shouldn't be there. Maybe it's a moment where the market behaves differently from how it behaved yesterday. That's the clue, not the move itself, but the behavioral change preceding it. Livermore's genius wasn't prediction, it was observation. He wasn't guessing where the market might go. He was recognizing when the market was no longer acting the same. And when he saw that clue, he did something most traders never do. He waited even longer. Because the first clue is just the whisper. The second clue is the confirmation. And the third, well, that's where conviction comes from. You and I live in a world where markets move faster than ever. News cycles refresh by the hour. AI algorithms react in milliseconds. Retail traders crave instant gratification. But the early market clue hasn't disappeared. It has only become harder for the impatient to see. That's why understanding Livermore's approach isn't nostalgic, it's essential. Tonight, we're going to dissect this early clue. We're going to break down what it looks like, how it behaves, what it reveals, and how modern traders can use it to avoid catastrophic mistakes and position themselves ahead of major trends. Because the secret isn't timing the market, it's listening to the market. And right now, somewhere inside today's charts, there is an early clue forming, a signal most traders will miss. But not you. Not after this. And this leads us directly into the final section, where the lesson becomes actionable, emotional, and cinematic. Every major win in my trading career came down to one decision: recognizing the clue or ignoring it. I want you to imagine something. Not a chart, not a candlestick, but a moment. A moment where the market shakes you not violently, not dramatically, but subtly. A moment so quiet that only a patient trader, a disciplined trader, a Livermore-minded trader would ever notice it. Because this final section isn't about theory anymore. It's about the choice you make the next time the market whispers. Let me take you to a scene burned into my memory. It was years ago, during a market that felt confused, tired, almost deceptive. Prices drifted without direction. Traders were desperate for action. You could smell impatience in the air, like gasoline waiting for a spark. Then, one morning, something small happened. Not a breakout, not a reversal, just behavior that didn't match the previous days. Volume picked up only slightly. One candle pushed into resistance and held only briefly. Buyers stepped in sooner than usual, barely noticeable. Most traders missed it. Some noticed it, but dismissed it. But I felt it, like a shift in the wind before a storm you've lived through 1,000 times. That was the clue, not the move, not the breakout, just the first deviation from normal. And I did exactly what Livermore taught me to do. I waited. Because the first clue is never the trade. The first clue is the invitation. The second clue is the validation. The third clue is the signal. And only then, only when the market has revealed its intent, does the real opportunity emerge. This slow, patient alignment, this silence before the surge, this pre-move fingerprint, it's the same thing Livermore waited days, weeks, and sometimes months to see, and when it appears, it changes everything. Now, I want you to think about your own trading, your own struggles, your own turning points. How many losses came from entering too early? How many mistakes came from wanting the market to move instead of waiting for it to show it was ready? The difference between chasing and reading, between hoping and observing, between reacting and anticipating, is the early clue. Livermore didn't trade breakouts. He traded behavior. He didn't trade news. He traded reaction. He didn't trade signals. He traded shifts. Modern traders spend thousands searching for shortcuts, systems, gurus, predictions, but the real edge isn't hidden. It's right there in the tape, in the small anomalies, the micro-behavior. Price hesitating when it should fall, volume rising when it should fade, momentum slowing when it should accelerate. These are not coincidences. These are footsteps before the stampede. But here's the part most traders never understand. The early clue isn't only technical, it's psychological. It reveals when the crowd is uncertain, when institutions are positioning, when the narrative is changing beneath the surface. A market never turns on the day it looks dramatic. It turns on the day it looks confusing. That confusion is the clue. The moment buyers hesitate, the moment sellers get sloppy, the moment price defies the obvious. Livermore watched for these moments because he knew something timeless. Big movements begin long before the public knows they exist, and that hasn't changed. Not in 1907, not in 1929, not today. So here's the truth I want to leave you with. You don't need to predict the market. You don't need to fight it. You don't need to outsmart it. You need to listen to it. Because price always reveals intention, just not loudly, not immediately, not in a way that flatters your emotions. It reveals itself quietly, subtly, almost respectfully, as if granting a small advantage to those disciplined enough to earn it. The early clue is your warning, your opportunity, your compass, your protection, your edge. And the next time you're tempted to jump in early, remind yourself that the first clue is never the trade. It's the test, the question the market asks you. Are you patient enough to deserve the move? Most traders fail that test, but you don't have to. And now, the final piece. Tell me below, have you ever seen an early clue, ignored it, and regretted it later? Your story might teach someone else the lesson you had to learn the hard way. Emotional scene. I'll leave you with this. Every market cycle, every trend, Every bubble, every collapse, begins with a whisper. Livermore heard it. I try to hear it. And now, you're learning to hear it too. Well, trade patient. And don't move until the market speaks first.